We're back on Morning Mover. Shares of Boeing higher in pre-market trading on news that the parent company British Airways has ordered 32 787 jets to be delivered between 2028 and 2033. That's on top of some other orders. In addition, UBS boosting its price target to 226 a share from 207, reiterating its buy rating on faith that Boeing will be able to navigate the tariff environment. The analyst says that Boeing's proactive approach to tariff risk on prioritizing supply chain continuity over price negotiation is a tailwind. Boeing shares up nearly 5% this month. Time now for Options Corner. Joining us to take a deeper look at Boeing, ticker BA, is Rick Ducat, Duke of Data himself, lead market technician here on Schwab Network. All right, Rick, what are you paying attention to when it comes to the trends for Boeing?
It seems like a lot of stocks have become more tightly correlated as this news-driven environment continues to roil markets here. So we can see our comparison here. Boeing has done a lot of work to catch up to the XLI industrial sector and the broader market here. Notice as well how tightly correlated it is in recent months here. The 20-day correlation here is very close to 1, which would be perfectly moving in tandem. So I'd be curious to see if that relationship starts to break down. We can see now, though, that Boeing has made a V-shaped recovery here that has taken us above this green line, which was a consolidation area back here, and then a frequent high point on our chart, and another consolidation once again before yesterday. It seems that we've made a push to the upside. So oddly enough, we had our large rally here, but we have also broken through our rather steep upward sloping trend line. So even though we had a nice green day yesterday for the bulls, we have not taken out the old highs near 197, and we are below our trend line now. So price remains above our moving averages, but our trend line is a bit more of a question mark here. RSI moving into the overbought area, typically regarded as well as a sign of strength in a trending market. So if we were to quickly look at our long-term view here, we can see that we've got our volume profile point of control. We've left far away, and we have also passed our +1 standard deviation channel here near about 176. So this could be a supportive area to watch.
All right, so those are the areas to watch and potentially supportive area to watch. Thanks, Rick. All right, Tom White joining us now, a senior options contributor for an example trade on Boeing. So Boeing clearly one of the early winners when it comes to this trade deal between the U.S. and the U.K. How would you go about an example trade for Boeing, especially when you think about this latest catalyst, the tailwinds, the analyst activity around it as well? Tom?
Yeah, I think if you take a look at Rick's chart, breaking out to 10-month highs in today's session, trading around 193. But you look at a one-year chart, this thing's choppy. Every time you get some sustained rallies, you see pullbacks. So got to keep an eye on headlines with this name. So I looked at a strategy that's, it's bullish in stance, but you actually get a little bit of profitability if it falls a little bit. You just don't want it to fall out of bed and go down 1 or 2 standard deviations. So I looked at a 1/2 back ratio spread where I'm going to go out to the June 6th weekly cycle. So 28 days to expiration. You got a month in this position where we're going to buy one of the 190 strike puts and sell 2 of the 185 strike puts. Now, for this 1/2 ratio spread, you're actually going to collect a credit of roughly around $3, right? So what does that mean? Well, if the stock continues to move higher, you just get to keep that $3 that you collected on this position. But you can see here, it takes my break even all the way down to 177 on this, with a little bit of kicker at or near that short strike of $185. So if you do get one of those pullbacks that we've seen repeatedly in Boeing, you're still going to be okay. Now, what's the downside? Well, the downside is you're buying 1 put on the 190 strike, selling 2 on the 185 put. So you've got a naked short put there. So that's going to react more like a cash secured put. So takes it down to that break even. If we go below 185 on this, you're going to have to buy the shares if you remain short those 2 puts on the 185 puts, 185 strike. So you got to keep that in mind. There's a lot of risk if the stock were to somehow go to 0, but this takes advantage of a move higher, move lower. Hey, you just don't want it to fall out of bed on this type of strategy.
Okay, don't want it to fall out of bed on this type of strategy. I like the way you characterize that. That's an example trade for Boeing shares indicating higher in the pre-market, looking to add some of the gains that we've seen this year. Thank you, Tom.